Rather, having a gain means that you sold it for more than what the IRS believes it's worth at that point in time. Well, basically, the adjusted basis. Now, this term is used by the IRS to define what they believe the value of a property to be worth at any point during its useful life. Call this the Kelley Blue Book value. And it is exactly the same process that the IRS uses to determine what they believe the real estate asset is worth. Each year, they assume it's losing value for the exact same reason as that Honda Accord: wear and tear and economic obsolescence. The original basis, which is what you paid for it, plus the acquisition cost, less total depreciation. This is called the adjusted basis. Now, in our example of the Honda Accord, it would be a $30,000 original basis minus $10,000 of depreciation over the total of 5 years equals $20,000 adjusted basis. Why is that super important? Well, if you were to sell that asset for $1 more than the adjusted basis, congratulations, you have a gain. Reverting back to the Honda example, if I were to sell that 2020 Honda Accord today for $21,000, I wouldn't think I had a gain, because Kelley Blue Book says that 5-year-old car should have lost a total of $10,000 and should be worth $20,000. But I'm selling it for $1,000 more. And that, my friend, means that I have a $1,000 gain and would be subject to tax. Now, basically, having a gain to the IRS does not mean that you sold it for more than what you bought it for. Rather, having a gain means that you sold it for more than what the IRS believes it's worth at that point in time. The adjusted basis at sale, which we just calculated, was $1,555,493. That's what the IRS says the property's worth. We're left with a gain of $140,367. Then we're going to take out that cost recovery that we wrote off on the property, and we can see that our capital gain from appreciation is $95,859. We're going to factor into the equation those unamortized loan costs of $24,000 we took over the life of the investment for that 5-year period. And then we'll see that we have an ordinary taxable income left over of $71,859.